Hey everybody, good afternoon and happy Thursday. We have a very strong jobs market or jobs data point that came out last week, and a little preview of the Fed meeting coming up already somehow next week. My name is Brandon Steele, financial advisor with Mainsail Financial Group, and our goal every Thursday at 3 is to bring to you the market news, data, trends that we're watching, and hopefully weed out a bit of the noise along the way. This week, again, is really pretty heavily focused on jobs and the Fed, but we will also talk a little bit for our question of the week about the just kind of more of an update, I guess, on the debt ceiling now that there has been a bill that has passed and kind of pushed it off. So let's start first off with jobs. That'll tie into our Fed conversation, and then we'll wrap up with our question of the week. So just last week on Friday, for those who listened to our session last Thursday, we had talked a lot about the jobs at that stage because we had a big ADP employment report come out Wednesday last week. But we had kind of shared that really the one that we want to watch is the Friday jobs number. And so Friday, we had another giant jobs data point. So the non-farm payrolls number came out on Friday, and it was a big month for adding jobs. And it did, in fact, support that ADP number that, again, is not always the most accurate. So, it obviously, there are some thoughts as far as what that means for the Fed, which I'll share here in a minute. But then we fast forward to this week on Thursday, we had an initial jobless claims number come out, and it did tick up a bit. But, obviously, given how large of an addition we had of jobs in May, this doesn't really distract from the jobs data that came out last Friday. Now, why this is all so important is because just next week on Wednesday, we have the Fed sharing, number one, their decision, and number two, their thoughts in the press conference with Fed Chair Powell afterwards. So just as a quick recap, what is really important to the Fed are, well, let's call it threefold, but really two are the most important. One being inflation, two being jobs. The third is they want to make sure there's economic stability and markets are performing the way, not performing, are efficient the way that they should be. But let's focus on the jobs and the inflation data points, because jobs clearly not an issue, right? Jobs market is still extremely strong, continues to show resiliency, and really, the Fed has actually shared that they think it's a problem how strong the labor market is, because there's obviously a lot of job openings and things along those lines. Second is inflation. So coming up next week, the day before the Fed meeting, is the CPI data, which I don't think there's enough time there, let's put it that way, to really change the Fed's decision for that conversation. And if we go back just a week, we had PCI data come out that actually ticked up, if you remember. So that's the one that they watch more closely, in all honesty, anyway. And that one did tick up. So we have very strong labor market, inflation continuing to persist. So will the Fed hike? I think that with those two things in mind, based on their mandate, honestly, they probably should, right? That those two things in and of themselves would dictate yes. However, I think that the Fed is very concerned about the market's reaction, and although they say they aren't and shouldn't be, the reality is I think they are, and I think that's why it took them so long to start raising rates at the beginning. I think that's kind of why we're in this situation we are now. And so will the Fed hike? Obviously, I do not have the crystal ball, but in reality, I think that what is most likely, because of that concern, is they may not hike in this June meeting, but they may open the door even further for a July hike, which sounds completely kind of crazy, and obviously adds even more fuel to this fire that we keep talking about around the Fed. But it is important. It's one of the bigger factors in the way the markets are reacting, positive or negative right now. And so obviously next week's going to be really important to watch. On top of that, we also have retail sales. So definitely tune in next Thursday at 3. We're going to break down the inflation data, the sales data, and of course, kind of debrief on the Fed decision and press conference. Probably more importantly, the press conference. We'll really be paying close attention to what he shares within that conversation of what they're watching, especially if they don't hike, with what they're watching for the next meeting there. All right. Question of the week this week is going to be pretty short. It's kind of a follow-up to our last week's conversation, which is about the debt ceiling. And the reason I wanted to share this is because we talked about the impacts, how to invest properly, and make sure you're managing risk around the debt ceiling standoff. Well, here we are, and the standoff is no longer. So I think that, if you kind of listen to some of our conversations a ways back, we never really felt this was actually going to get to this X date. Here we are with a split Congress and an election coming up. And as you might imagine, that leaves a lot of room for political battles and, posturing through the year. And this was a perfect kind of opportunity for them to really point the finger and blame each other for what's going on there. So they did what they should have. Obviously we do have a bit of a challenge as far as spending and debt goes, but no, but I don't think anybody thought the answer was to not do something about the debt ceiling. And obviously the results show that. So they have a little bit of a spending package, a reduction in spending that both sides agreed on, and that allowed them to raise that ceiling. So luckily we can now put that behind us. Of course, the question is, well, what does this mean? The reality is, again, I think if we go back months, we had kind of always shared that we believed that this would happen, that we would not actually run up against this X date or go past it, I should say. And that's the case. So the reality is we saw a little bit of a pop in the stock market based on the news, but I don't know that necessarily drives things much more from here. There is some talks about, I think it was Moody's came out and said that they may still downgrade the U.S. Credit rating. If that happens, that's a different story. But just the debt ceiling in and of itself, that conversation, I think we really saw the market's reaction already. A short-term thing. I think most did think that this was going to get through, and here we are. So wanted to share a quick update since we did cover it last week, but luckily I believe we can now kind of put that in the rearview mirror and focus back, of course, again on the Fed. So definitely tune in next Thursday. We'll share a lot more about what's going on with the Fed and just kind of unpackage what he shares in the press conference as well. In the meantime, have a great weekend, enjoy the sunshine, and we will see you next Thursday at 3.